So the first option we have here is term. So when you hear of term, I want you to think of terminate or temporary. So the beautiful part is that it's affordable. The downside is that it expires, okay? Term is ideal, right? Maybe you have a tight budget. Maybe you want to make sure that you can get some type of life insurance protection outside of your job. Term is a great affordable option. Pennies on the dollar, you can get a lot of coverage, right? Second thing here is maybe you have young children. Your young children are going to be heavily dependent upon you for the next 10, 15, 20 years. A term option is a great option to make sure you have the proper amount of life insurance when your children are going to need you the most, okay? Other thing here is maybe you have a high insurable need. So what that means is that maybe you need a lot of life insurance, right? But it's temporary. So again, you can put that inside of a term life insurance policy. Last but not least, maybe you have temporary debt. Maybe you have a mortgage. Maybe you have a car loan, right? Maybe you're in a certain amount of debt and you want to make sure you have the right amount of life insurance. So therefore, if you're in a state where that debt can pass over to your spouse, you have the proper amount of life insurance that you need, but it's not going to be debt forever, right? You're not going to have your mortgage forever, but hey, God forbid something happens to you, you want to make sure your house can be paid off. That's term for you, okay?